Ladies and gentlemen, good day and welcome to the Q3 9 months FY22 earnings conference call of MTAR Technologies Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Srinivas Reddy, Managing Director and Promoter, MTAR Technologies Limited. Thank you, and over to you, sir.
Thank you. Good morning, ladies and gentlemen. Welcome to Q3 FY22 earnings conference call. We have uploaded our updated investor deck, press release, and result highlights on the stock exchanges and company website. I hope everybody had an opportunity to go through the same. To begin with, we have obviously we all know that we are still being hit by the COVID situation all over the country, in fact all over the world as well. But we have been working towards what in terms of deliverables, especially in supply chain issues, where we have successfully were able to take up the challenges required to ensure that our targets are met. And we are pretty much sure that by end of this year, we'll be able to achieve what we're supposed to deliver to our investors. Overall, it has been a very interesting year, not only in terms of the current year performance and as well as in terms of the fabulous developments and qualifications that the company has done during the current year for the future growth of the company. In the current Q3 quarter, we have done revenue of 878 crores with a PAT of about 13 crores. Overall, for 9 months, we have done 224 crores with 41 crores of PAT. And we had given a guidance of 20 to 25% of revenue guidance earlier. And looking at the very closely at this current year and the final quarter, I'm very positive and I'm pretty confident about the guidance being given earlier. And also, I would like to mention that I would like to revise my guidance upwards to about 30 to 35% for the current. And looking at having a clear roadmap for next year based on the strong order book what we have in various sectors, I would like to give an initial guidance of 45 to 50% revenue growth for next financial year as well. As you're all aware, that we are involved in nuclear, space, clean energy sectors. The most important thing is what have we done in terms of product developments, qualifications, and increasing our wallet share with various customers, existing customers as well. Today we have been qualified for the roller screws, which we have been talking about. That's going to be a major import substitute for the company. We already received orders, initial trial order from DRDO for that. We also received orders for the electromechanical actuators, which is a very good news. And further, we are doing various first articles for a number of new customers in terms of the growth for the future. We're looking at Bentel, which has joined our customer list. Technique from oil and gas, Voice Hydro from clean energy, Hitachi from clean energy, Enercon from Germany from clean energy as well. So all these various customers that we're working on have released the orders for the first articles, which will convert into a volume business over the years. And we're also working with various other customers as well right now. And once we have further progress, we will definitely inform our investors accordingly. The idea is to widely increase the customer base across all the sectors. That's the goal of the company as of now. And as far as increasing the wallet share is concerned, the specialized sheet metal factory is getting ready by March. But we've already started our first articles work, especially with Bloom Energy to start with. and the qualification for the sheet metal requirements will get done by March. That means you can expect a huge volume orders coming in once the qualification is done. And that's something which is, we have taken it on fast track and done in the fastest possible case, which is something very encouraging for us as well. Apart from this, we are still working on various other systems and subsystems in defense in various areas. With respect to the Atmanirbhar program, our R&D is working on them as well. So that will help the company to increase its potential in terms of the defense business in the long run. So overall, it has been a very encouraging year for the company, and I would really appreciate all the management and the employees of MTAR, in spite of COVID, being very committed to the company to ensure that we are right on track in terms of what we need to achieve in terms of numbers and also in terms of what we can develop in terms of new product development and the qualification processes that we are involved with. I would now like to hand over to our Chief Financial Officer, Mr. Guneshwar Rao, to take it forward, and he will explain you more in detail about the number financials at this point of time. Thank you.
Okay. So thank you everyone. This is Guneshwar Rao, CFO. So good morning for everyone. A warm welcome to our Q3 earnings call. I will take you through the key financial highlights, and post which we will open the floor for the questions and answers. So despite, in case of revenue, despite the COVID pandemic, we were able to grow our revenue by 41.4% year on year to 78.1 crores compared to 55.2 crores in Q3 FY21. So there is a 41.4% increase in revenue on year-on-year basis. So the revenue breakup for the current year 9 months stood as follows. Like in case of space and defense, is contributed 19% of our revenue. Nuclear energy contributed 14%. Clean energy contributed 64% of revenue in the current 9 months of this financial year. The order book for as on 31st December is around 478 crores, which will be executed in 12 to 15 months' time. This 21.2% of our order book is from the nuclear sector, 28.7% consisting of orders from space and defense sector, 49% of our order book is for the clean energy vertical. We have received further orders after this Q3, December 31st. Order book as on 7th February is 599 crores we have as on today, on 7th February, compared to 477.6 crores as on 31st December 2021. So there is almost 120 crores extra order book we have received during the this month, like Jan and February, up to February 7th. So the EBITDA reported is 22.8 crores in Q3 FY22 as compared to 17.5 crore in Q3 FY21. There is a 30.3 increase on year-on-year basis. In case of profit before tax, which stands at 18.7 crore as against 12.4 crore in Q3 FY21, which is 50.9% increase on year-on-year basis. Profit after tax, which is reported at 13.3 crore as against 8.8 crore in Q3 FY21. This also has a 50.5% increase on year-on-year basis. In case of diluted EPS, which stands at 4.3 per share for Q3 FY22 as against 3.3 per share for Q3 FY21. So there is an increase of 1 rupee per share on this Q3 FY22. To conclude, we would like to highlight that increasing revenue and sustainable margins due to operating leverages play out will significantly improve the return ratios. So with this, I open the floor for a discussion.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Thank you for taking my question. On the clean energy side, can you put some light first, because in the press release...
I'm sorry to interrupt you, Mr. Arora, but we cannot hear you clearly, sir.
Okay, I'm audible now?
Yes, please go ahead.
Okay. So my first question is on the
Nitin, you are breaking up, Nitin. Not able to hear you well.
Okay.
Mr. Nitin, we cannot hear you, sir. Mr. Nitin, your voice is breaking. You are not audible in the call. May we request you to please rejoin the queue with a better connection. We'll move to the next question, which is from the line of Santosh Yelapu from Asian Market Securities. Please go ahead.
So thank you for the opportunity. Good set of numbers. Congratulations on that, sir. And good to see new customers joining us. So 3 questions from me, from my end. First, the call just held few hours back indicated that H1 CY22 would see flat YOY revenues. So if I go with that statement, is it fair to interpret that Q4 FY22 and Q1 FY23 revenues, the clean energy revenues of ours will remain flat on a YOY basis?
I don't think so, Santosh. If you look at the numbers what we have right now, the order book what we have, in fact, which if you all remember that I've said that there would be additional units, hot boxes of 1,000 numbers plus subsequently, right? So we did receive that order recently, and the numbers for Q3 and Q2 and Q3 looks pretty strong, much higher than what we expected, right? So, and obviously Q4 for us is Q1 for them, FY23. So the indication is that they're getting to the mode of additional hot boxes, which I have mentioned with the new orders what they have received. So still on the pipeline, so there's no issue with that as well. And as far as the additional wallet share is concerned, which I mentioned earlier in my call, that regarding the qualification process for the sheet metal requirements, that's really an advanced stage. We have taken it on fast track, and it's being qualified by March of this year. So we're expecting the orders from the sheet metal requirements from Bloom for Q2 and Q3 for this calendar year, for this next financial year. And obviously it'll continue for the subsequent quarters as well. So we are looking at we don't see any kind of issues in terms of having that kind of growth going forward as well.
Okay, sir. The second question, Bloom again in the call mentioned that they are expecting or targeting 6 to 8% cut in the raw material costs for CY22. And on the other hand, if I look at the recent inculent prices in the international markets, for the first 45 days of this quarter, we are seeing an early double-digit increase in the prices on a QOQ basis. So if I connect both these data points, is it fair to understand that the clean energy segment, despite strong growth, could impact the margin profile of the company for FY23?
Absolutely not, Santosh. I've explained this earlier also. The first point is we have signed a contract for the inculent sheets for the entire year with VDM in Europe. So we have done that already. Our prices are fixed. Secondly, if there is any escalation of prices in terms of the next year requirements, I'm talking about we have signed a contract for the entire calendar year for this year. And in terms of the next calendar year, if there are any issues in terms of price escalation, that is captured in our cost itself, and it is taken care by Bloom. So we are not really worried about that. And obviously, we get a price advantage. Bloom is right because we buy in huge volumes. You cannot really compare to the regular pricing structure what you have seen in the markets. Since of the huge volume requirements, and we are directly approaching various mills in Europe, Japan, elsewhere. So obviously, we have a good price advantage. That's the reason why we sign an annual contract with them, which we get a much better price. So I don't see that affecting us at all, even in the next financial year as well.
So just to clarify myself, it means the 220 crores order that we got in September, that for that internal procurement has been done and it's booked, right?
It's already been done. Contract has been signed. In fact, the additional 1,000 boxes which I have mentioned, for which we have received the PO from Bloom, which I said we'll be receiving it. Even for that, we have signed the contract, so there's no issue about it.
Okay. And so lastly, Bloom mentioned in the call that they are expecting their revenues in the next 1 decade to touch almost $15 billion. That translates to an implied 35% revenue CAGR. So is it fair to that going forward, the mix of clean energy segment would increase from the current levels of 60-65% levels in the second half of the decade to almost close to 80% levels? So will we be having any margin levers left? Because our understanding is that the nuclear and space tends to have a higher margin than the clean energy business there, sir.
See, I've always maintained that margins across the board are almost similar, except for space, which can be slightly higher by 50 percentage points. But Santosh, when the volumes go up higher and higher, and improving the shop floor efficiencies is what we look at MTAR, and also the various developmental activities they have taken up. So obviously, the margins will definitely not get affected. We're looking at the absolute numbers going very high, and the margins can be plus minus 1-2% here and there, but I don't see any effect on our EBITDA margins. And MTAR always worked on very key projects where the margins are always being maintained. And for example, which I said, the bellows are being developed in MTAR itself, which we are importing right now. Now we are submitting it for qualification for 2-inch and 7-inch bellows for Yuma boxes. So a lot of such great developmental activities we as a team have taken up. So I don't see it affecting in any case as far as the margins are concerned. The absolute numbers will really grow very well, and the margins will be right up there. I can't probably at 1 or 2% points here and there, but we'll be right up there.
Thank you, sir. I'll join the queue for more questions. Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1. The next question is from the line of Renjit from Mahindra Manulife Mutual Fund. Please go ahead.
Yeah. Hi, sir. Good morning.
Good morning.
Yes, sir. If I see sequentially, there is a drop in the execution. So just wanted to understand that which had been the challenging is it, and will you expect that to get normalized in the fourth quarter, or will it be kind of a longer term?
I would really not give importance to that at all, because if you look at our numbers even in the past, if you look at Q4 of last year to Q1 of this year, there was a drop. But overall, we have been achieving the numbers what we are supposed to achieve, what guidance we have given. As I said, my initial guidance was 20 to 25%, which I have given for revenue growth. Now, looking at the way we are moving ahead for this year, we're looking at I've given now an increased guidance of 30% in revenue growth, maintaining similar margins. So that itself should be an indicator for you to see where we would stand in Q4 as well. So that's exactly what I was trying to explain earlier as well. So we are definitely in line or even better than what we have promised earlier to the investors, and we are moving forward with it. And at this point of time, I have clearly mentioned even earlier that I'm pretty, because of having a clear roadmap for next year with a strong order book, my initial guidance I've already given for the next financial year to be about 45 to 50% revenue growth, which is phenomenal. And that's the kind of work we have done in terms of developing various products and also developing various, getting qualified for various areas with new customers as well. So all this is something which has given me confidence to give a preliminary guidance of 45-50% even for next year as well.
Okay, great. And nuclear orders have continued to be kind of a postponement. So where do you finally see what is the status there? Because in the budget also we saw the NPCL allocation has increased both in the revised estimate and the budget estimate. But are we seeing something on the ground in terms of NPCL doing more in terms of calling for tenders and giving out orders?
Yeah, see, as I mentioned last time, our business plan for next year more or less does not include the new nuclear orders that we're going to get in right now. So we have a very good prospects of getting a great amount of orders from nuclear division. We have been quoted for the 3 reactors for the phase 1. We have quoted for some of them. Some more tenders are coming in. Now, the purchase orders, when they will be released, probably in this quarter or beginning of next quarter, this is a timing issue. But that's not going to really affect us in the next financial year, and neither it's going to affect us in the subsequent years, because that's how we have built our business plan. So there is enough strength of orders coming in from nuclear. There's no second thought about it.
Okay, and in terms of the hot box units, how much we have supplied this year, this quarter, and how much was it compared to last year, same quarter, and last quarter?
I don't have the exact numbers right now, but we are doing a substantial number of boxes this year. I think more than 2,500. Next year is about 4,000 plus boxes. That's what we're looking at. So that's a substantial increase from the previous year, and the next year is going to be even much higher. So that's exactly where we are at this point of time.
Was there any price increase in the box realization given the commodity prices going up?
As I mentioned earlier, when regarding it's not exactly about the commodities, about the internal. We have signed the contract along with the POs we have received, so that's already fixed. So in case there are any increases in terms of any requirements, that is captured in the pricing itself. So MTAR doesn't get shielded completely in terms of such fluctuations. And we also sign contracts with every supplier way ahead of time for the entire calendar year. So we are well protected in that as well.
Okay, and sir, finally, this other expenditure, there's a small increase QOQ and YOY. So is there any one-off out there under the other expenditure?
Ganesh, you want to answer that, please? I think he lost his line. Can you repeat your question, which I can answer?
I can.
Ganesh, can you answer that, please?
Yeah, the other expenditure actually consisting of manpower cost and the G&A expenditure and the other direct costs. So these expenses are increased in Q3 of this year compared to last year, make us the revenue. The other direct expenditure is increased in proportion to the revenue. In case of a manpower, we have actually trying to build the manpower and give a training for the next year projections. As Mr. Srinivas said is saying, there is a growth anticipated in the next year. So we have appointed some of the employees so that they can be trained before the actual requirement comes in the next financial year, for which we have an orders also.
Okay, so how many people we have added this year till date?
As on date, like this financial year, around 80 people have added.
Okay, and the other expenditure, is there any forex related gain loss?
It is very less. Around 2 crores is only there. Gains are there.
Gains are there.
Yes, 2 crores.
Okay. Sir, so if I can ask one more question, like just we have also been working on this hydrogen boxes and the other electrolytes. So what is the update on that? Are we expecting some orders in that? What stage are we in that? Those are also very lucrative areas which we are betting on.
Yeah, as I mentioned earlier, we have already, from our side, the qualification process is done. We have submitted the batch production as well. We have heard that electrolyzers are going to start the batch production from next quarter. This I have clearly mentioned that the electrolyzers and hydrogen units will come into play from second half of next year. But I will update it as when it happens. It's obviously going to happen for sure. There's no doubt about it. The whole focus is on that as well. But whatever the upside to this is not what I've considered in our business plan as of now. So as and when it happens, it will definitely happen, we'll intimate to all of you about it.
Okay, sir. All the best, and I will join for further question later.
Thank you.
Thank you. The next question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, am I audible, sir, now?
Absolutely, Nitin. Now you're audible. Please go ahead.
Okay. Sir, just sorry if somebody has asked this. I again joined the call back. Can you give me the breakup of this 120 crore order which you have received in Jan, Feb?
No, we're talking about the recent orders. No, basically the orders are coming from Bloom Energy and also from aerospace Rafale. These are the orders. These are the major orders. There are a lot of other orders which have come in, but they're coming from Bloom Energy, and Rafale has started giving new orders for the exports of defense. We have received orders from them as well, and they're expecting further orders. That's very good news, actually. Rafale has started giving further orders. We have developed certain first articles for Rafale as well in the Q3 of this financial year. And for those, we are looking at almost $3 to $4 million further orders coming in from them. So that's moving pretty well. And another important thing is, as I mentioned earlier, that we've added a lot of new customers doing FAs right now. And in fact, even Israeli aerospace industries, the CNMO team visited us, and they were extremely happy with the kind of facilities we have, the technology we have. So they are also looking at joining hands with us in a big way in all the requirements, especially in the space business, what they're looking at in a big way. So I will probably update as and when there is more and more progress on that part of the story.
But large part would be, sir, clean energy only out of that 120 crore?
It's about 70 odd crores to be clean energy, and the rest would be a lot of other customers. Yeah.
Got it. But nothing in nuclear, right?
Nuclear, we have already become, literally L1 in a lot of contracts. So the only thing is we're waiting for, it's only a timing issue. We're just waiting for the POs to be delivered to us. Hopefully they should come before March or April, but that doesn't really affect our numbers even for next year. So
and how big is that order, the nuclear one, which you are expecting in, let's say, March or?
No, we have like FM bridges column, we have calendars under review, then we have the fuel transfer system. So we are quoted for all this, and we'll definitely get these orders. So all these orders are in the pipeline. So there are a lot more tenders which have been quoted after that as well. So all this will come in, and it can be only a timing issue, nothing other than that. So that's not going to, it's not linked to our next year numbers as well.
Getting it. Sir, on your guidance part, just wanted to touch base. So 35% growth for this year. So looks like Q4 should be strong. But you expecting the run rate on nuclear to improve, or clean energy, which is doing 55 crore on an average, will go to 70-80 crores, will make up for the nuclear decline? And the second question, when we go to the next year, 23 on 40-45% growth, is it possible to quantify how much contribution will come from the clean energy in terms of revenue? Because I remember you said, I think you have already done 1,800 boxes in 9 months. So looks like, you'll close 20, I don't know, I'm just asking you, will it be 2,600 this year? So next year, if you can reiterate how much contribution in revenue from clean energy and number of boxes, that will be helpful for us.
See, if you look at the current year, within the last quarter, yes, there is a substantial number coming from clean energy, but there is no decline in nuclear as well. We have enough order book for this year and next year for nuclear. That's why I said the new orders are not linked to the next year business plan as well. But if you look at the next year numbers, we're looking at almost the kind of growth number we're looking at almost more than 50%, 50 to 55%, or even close to 60% coming from clean energy. But what is most important here is, on an absolute number basis, the domestic numbers are also improving drastically. If you look at the balance part of 200 crores and all. So that is something which is very substantial, and that's something which we need to make note of.
Getting it. And sir, in terms of the sheet metal order, I know you said, the orders are getting close now. Is it possible to quantify the size, how much we can do in, let's say, FY23 because of that? Or is it a part of the clean energy numbers only when you said 60-65% of the total sales would be clean? So that should be part of the sheet metal.
I have not taken that into effect, Nitin, right now. See, when I look at when I've given the initial guidance of 45 to 50%, I normally don't take into account what is yet to be done. That's how I look at it, because as you're aware, I would always like to promise less and deliver better. So the sheet metal part of the story is that we will get qualified by end of March. In fact, we're in a very advanced stage there. And once we get qualified, we are looking at between $10 to $15 million of anywhere between $10 to $15 million of business coming in the next financial year. But as and when that happens, I'm going to update all of you on that. So that's something which is going to be our upside for the whole thing.
Got it. And so just last, just a clarification. Next year, what I remember you said earlier about 4,000 boxes. Correct me if I'm wrong. So that stands as it is.
In fact, if you remember very well, in the last call, I've said that we'll be getting additional 1,000 boxes purchase order for that, which we have received now. So that 4,000 boxes is confirmed right now with clear backup POs for that, and that's for the calendar year. And obviously, that for our Q4 and for Q1 of next year, we will expect a higher number as well, right? But I'm still taking that 4,000 number extrapolated to the financial year for Indian financial year.
Got it. All the best, sir. Thank you so much for the answers.
Thank you, Nitin.
Thank you. Participants, to ask a question, please press star and 1. The next question is from the line of Santosh Yelapu from Asian Market Securities. Please go ahead.
Thank you for the opportunity. Couple of questions, sir, from my end. Sir, if I do the reverse calculation for the order inflows one, I think this quarter Q3 we won 1.3 crore worth of electromechanical actuators order. And what will be the balance order for the remaining, I think, 18.8 crores, sir, of the orders? They will be from which segment?
No, we have from different customers also, Santosh. We have from, I said, we have received orders from new customers as well for first articles, right? From Voice, from Hitachi, Bentel, Technic. We have received number of first article orders from various customers and also from the existing customers as well. So it's widely distributed actually.
So it is included in Q3 numbers, order info numbers, as well as Q4 order info numbers. That means the first 2 months, right? Is that my interpretation?
Yeah.
Okay. Yeah. So all these new players, the orders that we're winning, what is the nature of these orders, sir?
See, basically, if you look at Bentel, for example, they're into defense exports. They're from Israeli base. Technip is oil and gas. Now, the good news is even Schlumberger has come back to us that they would like to restart in a big way with us. So right now, the initial discussions are going on. So we're expecting sizable orders to come in from Schlumberger in the oil and gas sector, which is picking up right now, which was down in the last 4, 5 years or 7 years, 5 years, I guess. Then we have Voice from Hydro, which is under clean energy. Then Hitachi from waste to energy, which is again under the same concept. Enercon is from a German-based company working for windmills. So that's very critical key rotor and stator assemblies, which I mentioned earlier. That's now come through. So these are all the various companies that have already started issuing POs for the first articles, and then it will obviously translate into batch and volume production subsequently. So that's how the whole thing is moving forward. And the focus and the goal for the company, which I mentioned in my call earlier, is to increase the customer base in various segments, and that's what we are also doing, and also trying to increase the wallet share within the existing customers.
Right, sir. Sir, what was the inventories and receivables outstanding at the end of Q3 FY22, sir? And what was it?
Want to answer that, please?
Yeah. For FY22, you're asking, Santosh?
No, Q3 FY22 is asking.
Okay. So the inventory as on this YTD, like 156 crores inventory we have, and the debtors is 100 crores we have.
And Santosh, all our debtors, we get paid very promptly, so there's absolutely no issues, including the so-called, everyone keeps asking me this, but all the strategic sectors pay the funds on time. There's no issue with that.
Sir, if I may ask, what are the cash generated during the 9 months, CFO? Cash flow from operations. What's the number, sir?
Cash flow from operations, sir. Okay, I'll just tell you.
You're saying cash generated from operations.
Yeah, actually there is a negative 32 crores because the EBITDA is 67 and other expenditure minus 10. So operations EBITDA is 57 crores, whereas the working capital 89 crores is increased. The cash flow from operation is negative 32. The reason for this is mainly the working capital. Because of this COVID pandemic, we don't want to be in a situation our production should not hamper, due to which we have procured some material at the price advantage also. The steel prices were increasing. So we procured some of the material which requires for our production in clean energy and other areas. So there is because of that operations cash flows are low.
So, and got it. Thank you. So lastly, do we see a scenario of a further stretch in the inventories given that the pipeline of orders from the blooms we have? I think, do we see more possibility of a stretch in the inventory, sir?
Not really. See, what will happen is we have already, yes, obviously we need to make sure that the inventory levels are maintained. But we are more or less there right now because we are given the contract ahead of time. See, Santosh, we are looking at a lot of shipping delays. There are delays from the supplier side, in terms of their own production in Europe and US because of the COVID scenario. So hopefully, I think with this Omicron and things stabilizing over the next 3 months, I think, as I mentioned earlier, we should come back to normal working capital cycles in 2-3 quarters from now. I'm not saying it will happen overnight, but it's not a great stretch, but we are working towards the best possible scenario. But at the same time, we also need to ensure that we have enough inventories in the factory to ensure continuous production. So it's probably a win-win situation for the company as of today. That's the reason why we're not really getting that much affected because of COVID, because of advanced planning.
All right. So lastly, one more bookkeeping question. What's the debt and cash outstanding on the books? Anything? As of at the
Gunesh, you want to talk about I think you have 150 crores of cash lying in the company plus whatever debt. Can you explain that?
Yeah. There is our cash and cash equivalents and investments are around 170 crores. In case of a debt, we have around 80 crores of debt is there. Total is 80 crores in both term loan and working capital.
So lastly, sir, what's the capex for FY23 outlay, sir? What we are planning to spend for FY23?
FY23, as I said, we are looking at the major expansion plan for Bloom Energy for FY24, which we need to look at about 30-35 crores. I mentioned in the last call, we're trying to implement that. So that's almost doubling from 4,000 units to about 7,000 units plus or 8,000 units. And plus, we'll also have the Kilako, hydrogen, a lot of things kicking in at that point of time. Apart from that, we already would have implemented the sheet metal and specialized fabrication. So other than that, we don't see much. We would like to see probably a few bottleneck areas here and there. That's what we would see. Another important point which I would like to mention in the earnings call is we all know that MTAR has a subsidiary company called MTAR, which, as we're all aware, MSME has a major advantage not only in terms of the Indian defense tenders, but also in terms of the offset clauses. So here we are looking at a company of asset acquisition where MTAR can quickly become an active subsidiary company for MTAR as an MSME. That's what we have mentioned. We allocated a budget of 10 crores for that. That's going to be a very positive move for the company, having great acceptance in terms of MSME advantage that we have. So other than that, I don't see any much of a capex requirement other than what I mentioned earlier.
If I may have to add, this Adipatla fabrication capex, which will be capitalized in next financial year, though those funding is arranged already this year.
Okay, sir. Thank you, sir.
Thank you. The next question is from the line of Amar Maurya from Alfacarat Advisor. Please go ahead.
Yes, sir. So thanks a lot for the opportunity. Broadly, my questions are answered. One clarification, sir. You said that sheet metal capacity will commission when? March 23 or March? Hello?
March 22.
March 22.
March 22.
Technically, it is already being commissioned, but I'm talking about complete commissioning in totality will be March 22 because we already started doing our first articles for our customers. So overall, it will get commissioned by March 22.
Okay. And sir, broadly, in terms of the visibility, like, the sheet metal, we are going to supply to the space as well as to the part of the Bloom Energy. So, I mean, will we see some substantial revenue in the sheet metal in 23?
That's what I mentioned earlier, that once the qualification is done, then they will, I said that we're looking at about $10 to $15 million of orders coming in, but that I'll be able to update all of you once we are qualified by end of March, and then we can obviously see a lot of revenues coming in from that new capability what we have. And also from the space, we already have an initial order for 7 crores and we'll get a lot more than that. So that's all increasing the wallet share within the existing business. So that's the reason why we have added this.
Okay. Okay. And sir, this whole 9 months, what would be our number of units which would have supplied to the? I mean, how many number of hot boxes would have supplied in this 9 months broadly?
I have the absolute number. I think around 1,800. But that's what I think.
Okay. Sure. Thank you. That's all from my side.
Thank you. The next question is from the line of Narendra Masalkar from IIFL Securities. Please go ahead.
Yeah, hi, sir. So what is the order inflow guidance for FY22 and subsequently for FY23? And if you could also highlight the status on ISRO orders that we were expecting.
See, basically, as I said earlier, the orders from nuclear are expected anytime. It's only a timing issue. But technically, I did mention that the closing order book would be around 700 crores. But we need to get a few nuclear orders. It's only a timing issue, and that's what we're waiting for. And FY23, the order book could be even stronger than that. I can't quantify the number right now, but we'll have substantial orders coming in from nuclear, clean energy, and various other customers. So we'll be able to we'll have a more clarity by end of March. What would be our order book position by end of FY23 as well. But definitely higher than FY22 for sure.
So, and the space orders that we were expecting?
They're already through. The only thing is the paperwork is getting done. That's 65 crores. So we're just waiting, hoping that it will be done in this quarter.
Okay, thank you.
Thank you. Reminder to the participants to ask a question. Please press star and 1. The next question is from the line of Ranjit from Mahindra Manulife Mutual Fund. Please go ahead.
Yeah, hi sir. Just a clarification in this Bloom order, there was one key lock I think the new age hot boxes. So we were expecting some orders in that also, no, for next year execution. Is that, are we expecting
Yeah,
that?
that's something which, see, as I said earlier, normally I announce that once we are complete with the batch production as well. Right now we're doing 40 numbers of Kilo in this quarter. Probably we'll do 30 this quarter or all the 40 this quarter. Once we complete with that, then the second half of next year is when the Kilo production will start ramping up. So as and when that happens, obviously that will be something which is an upside to the whole thing.
So this 4,000 hot boxes which you have given guidance for next year doesn't include this Kilo?
No, it doesn't include that. It's just all these are Yuma boxes.
Okay, so whatever we execute, that will be an addition to whatever we are guiding for.
Absolutely, yes.
Okay, and in the space with this new chairman coming in, are you seeing activities in the ground? Can we expect some good news in that? What's the overall view?
Yeah, to my knowledge, Somnath is a very dynamic individual. He has done great work for VSSU earlier. We have been associated with him for almost 30 years. And he knows our company also very well. So overall, I think we got a very good person on the right place. So hopefully things will move pretty fast with Somnath being at the helm of the affairs.
Okay, and sir, in a longer term perspective, like this electrolyte, whatever we are developing, so is it exclusively for Bloom, or can we also go and approach other hydrogen manufacturers to supply to them? Is there any exclusivity for this electrolyte thing?
This particular, what we have developed along with Bloom is for Bloom. There's no second thought about it. But we are free to develop for other customers as well as OEM suppliers. So that's what we are looking at. So there's no restriction as such.
So anything that we are...
important is the company maintains each customer's technology very confidential. So we don't mix up the technologies with other customers, or we don't share it also.
Okay, so anything in that we are exploring with others in the to just as a hedging for in terms of the overall concentration to Bloom.
No, that's what I said. There is absolutely no concentration. So here we're looking at, we are in different sectors. Every domestic sector is going for us. We're adding a lot of new customers, they said, like Bentel, Technip, Voice, Hitachi, Enercon. A lot of new customers have joined in. All this will translate into good business for us over the next 1, 2 years, 3 years. So the company focuses in that direction. And obviously, that's where we're heading. So we are pretty much sure that to improve our customer kind of range, that's a priority, and we are definitely working on it.
And regarding that roller screw, that import substitution, what is status currently? Anything positive in that?
Yeah, I did mention that we have already got qualified by both space and defense as well. Defense has already released the trial order. Space is releasing it in this quarter. So once the initial trial orders are submitted, the first articles to both the departments, and then it will get commercialized. So we have done fantastic work in that. I really appreciate the entire team for that. And that's where we stand in roller screws.
Okay. Okay, sir. Thanks and all the best.
Thank you.
Thank you. Ladies and gentlemen, in the interest of time, I would now like to hand the conference over to Mr. Srinivas Reddy for closing comments.
Yeah, I would like to thank all of you for joining in today's earnings call. And I would like to once again say that we are right on track in what we have mentioned earlier, and also for the next year, in spite of the COVID restrictions being imposed all over the world. And I would also like to thank each and every one of you in supporting this company. And I would really appreciate that. And also I would like to thank my entire team including all the employees, the operators, everyone working, risking themselves and working at such critical situations with COVID around everywhere. So I would like to thank each one of them, and thank you so much for joining us today.
Thank you. On behalf of MTAR Technologies Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.